everyone, and welcome to UBS Trending. I'm Anthony Pastori. We continue to assess and monitor the ongoing crisis in Ukraine. First and foremost, this is a humanitarian crisis where innocent civilians are being injured or dying in the crossfires of this senseless and ongoing act of aggression by Russia. So first and foremost, our thoughts and prayers are with and will continue to be with the people of Ukraine. So now on to the investment side, which of course we know is another area of concern for many of you watching this today. We know that history is filled with wars, conflicts, and geopolitical crises like we're seeing here between Russia and Ukraine that can help investors assess the potential impact of what's going on right now. So we're going to discuss that today and even get some great ideas from Dan Scansaroli, our colleague from the UBS Chief Investment Office. So Dan, good to have you here, and thanks for joining me.
Thanks for having me, Anthony.
Yeah. So Dan, let me ask you, now clearly we're watching this, we're monitoring this fluid and ongoing crisis, this war that's happening over in Ukraine, and CIO just recently published a report on managing wealth during crisis and war, which clearly is a topic that many of us are thinking about. So with these terrible developments around the Russian invasion of Ukraine, maybe you can share with us what we can learn from other conflicts and other wars that we've seen in the history books.
Absolutely, and as you pointed out, Anthony, the full-on Russian invasion of Ukraine is both horrific and disheartening. The events of the last 15 days have shown us the bravery of the Ukrainian people as they fight for their homeland, and our hearts do go out to them for a peaceful resolution very quickly, we would hope. Mm-hmm. The events have also shaken global markets, as you pointed out, with high volatility as the war continues and various countries impose sanctions on Russia in an attempt to pressure them to withdraw. The sad truth is that history provides us with a multitude of geopolitical crises and wars that can help investors understand the potential impact of these events on the market and their personal situation. Each event is unique, but rarely, when we look at the data, have they caused a global recession. For the Ukrainian war, we also don't see a recession in our base case, but we do see volatility remaining elevated for the next couple of months. Looking at 27 events dating back to World War II in the 1940s, we find that the uncertainty at the beginning of a crisis can cause an initial drawdown in the market. But however, these losses tend to be temporary in nature. For example, 65% of the crises and wars that we looked at have seen the S&P 500 recover with a positive return within 3 months. We also find that investors who have investment horizons of 3 years or longer, they've rarely experienced a loss of capital. 87% of the time, markets have produced positive returns with an average return of almost 20% for that 3-year period.
Right. So, when we look back at history, Dan, it appears that some of the recent losses that and you're even saying this here, they could be temporary in nature. So with that knowledge that many investors are, they get nervous. There's a lot of uncertainty. We're also just coming off of a global pandemic, which already caused the markets to be quite volatile. Inflation is at an all-time high. They have a tendency to want to sell, then get back in later. But of course, we know that that's not always the best strategy. So what is the right strategy here for investors who are getting nervous and want to get out?
Well, generally, emotions run high when market volatility is high, and the main issue is that by selling, you're likely to lock in otherwise temporary losses and miss the opportunity to participate in a subsequent market recovery. We tend to see when we look at the data that large losses are often clustered with strong gains as markets gain clarity on the impact of different events, like the sanctions that we're seeing. We're seeing a lot of back and forth on a day-to-day basis.
Right.
By selling, it's a missed opportunity to potentially recoup those losses and stay on track for your longer-term growth potential.
Right. So here's the question: is what is the strategy that investors should perhaps consider to help them stay invested, avoid sort of letting the emotional nature of this war, which it is very emotional. We all watch the news, and it's really hard to see what's going on there, and for us to even wrap our heads around why it's happening in the first place. So with all that in mind and reactions to headlines, what's a way that we can actually think about how to not disrupt our ability to reach our financial goals? Because at the end of the day, that's what we're all trying to strive for here.
You're absolutely right. We need to put the volatility in the context of our goals. And at UBS, we believe that investors should complement the assets that they have invested for that longer term investment horizon with another strategy, which we refer to as a liquidity strategy, that's designed to meet spending needs for the next 3 to 5 years. This is actually part of our UBS Wealthway philosophy. The liquidity strategy is funded with cash and bonds, can even incorporate your ability to borrow, with the objective to provide that comfort and context that you're going to be okay during times of uncertainty to be able to meet your short-term needs. The confidence that you'll be able to meet your needs for the duration of a bear market can reframe the losses you experience in your longevity strategy, the assets that are invested for long-term growth. This can help you avoid the instinct to react to market volatility and disrupt your ability to stay on track for your financial goals.
Right. And in history, we've seen this transient nature of volatility and losses. So having this type of strategy, especially talk to your financial advisor to make sure it's appropriate for you. But it seems to make a lot of sense, especially given what we're experiencing right now.
Absolutely. It can be a critical strategy in helping you check your emotions, reframe the purpose of your wealth. Liquidity strategy for your short-term needs, longevity strategy, knowing that you're not going to need that for 3, 5, maybe even 40 years as you plan for retirement. And therefore, you're going to have the ability to grow that over time and not lock in those temporary losses.
Excellent. Dan, thanks very much. Very helpful. And I know this is a question that a lot of our clients are asking, their advisors who are also asking you these questions about how to manage this. So appreciate you coming by. Good to see you, Dan.
My pleasure.
Of course. And for more information and on anything we spoke about today here with Dan, you can reach out to your financial advisor, of course, but check out our website at ubs.com/views and follow us on social media. We're on LinkedIn, Facebook, Instagram, Twitter, and our past UBS Trending episodes are all on demand. You can find those on the YouTube channel for UBS as well as ubs.com/studios. And I can't say it again enough times, make sure to talk to your financial advisor, especially if you'd like questions about how and if you should be implementing a liquidity strategy in your own portfolio. So until next time, I'm Anthony Pastore. We hope you have a great day, and remember to keep your eyes on what's trending. We'll see you soon.